Now guys, we are going to discuss the agenda of this S&P 500 technical analysis. The first point of the agenda is the S&P 500 technical analysis on the weekly chart. So finally, after almost 1 year, the S&P 500 has breached and closed above the mark. The mark was 4155. Okay, and this was very important, and this was very significant. So we are going to analyze the technicals, that how the technicals have changed, what the technicals are saying about the S&P 500 on the weekly chart. So weekly chart means the hawk-eye view, the big picture. Okay, that will tell us what is going to happen in next 1 quarter or 2 quarters or so, right? Then the second point of the agenda of this S&P 500 technical analysis is the recession. We are going to discuss the recession in detail. Okay. Then the FOMC, the upcoming FOMC on May 2nd and May 3rd. Then the rate hikes. Okay, so as of now there is more than 90% probability that the Feds are going to raise the interest rates by 25 BPS. Okay. Anyways, now it's not about raising the interest rates by 25 BPS or 50 BPS. It's just about whether they are going to raise the interest rates or not. Simple. Okay. So then I will discuss the GDP, the GDP data. Okay, quarter on quarter it is simply just the growth rate. Okay, it is declining and declining heavily. Okay, 50%, by almost 50% every month. It is on the decline. So once again, recession is the best time to make a lot of money. So no need to fear this the recession. Rather, it's the best time to. Rather, you can think about the recession as the Black Friday sale. What happens in this the Black Friday sale? You get these everything okay at a very heavy discount, right? So similarly, recession is the same thing. You will get everything okay at like 40, 50, 60, 70, 80% discount. Okay, the premium stocks, right? Anyways, then the third point of the agenda is the S&P 500 support and resistance levels. So I will give you these the support and resistance levels. For example, okay, last week we knew that 4,100 is the mark. Okay, any closing below 4,100 means that now it is going to further come down, right? And if the S&P 500 is able to sustain above 4,100 or 4,110, then it will go bullish. It will remain in the short-term bullish trend. And in the bear side, we have 4065 and then 4035, the zone of 4035. And as of now, no matter what, it will remain above the zone of 4035. Okay, until and unless there comes very heavy selling. Okay, so I will give you these the similar support and resistance levels for the coming week. Okay, and the next week will be extremely volatile. Okay, now comes the fourth point of the agenda of this S&P 500 technical analysis, and in this the fourth point of the agenda. And in this, the fourth point of the agenda, I will do the S&P 500 analysis on the daily chart. So I will analyze and I will tell you that how the technical indicators have changed on the daily chart of the S&P 500 and how that is actually going to impact the entire US stock market and also the Dow Jones. Yes, I will also discuss the Dow Jones here. Okay, so Dow Jones has recently closed above its significant mark. Okay, very strong. This is a resistance level. So I will discuss the Dow Jones also and how the Dow Jones and the S&P 500 are impacting each other. Okay. Anyways, then comes the fifth point of the agenda, and I will discuss the S&P 500 probable movement from May 1st, 2023, which is Monday, through May 5th, 2023, which is Friday. So what is going to happen in the S&P 500 from Monday through Friday? And not just in the S&P 500, but also in the Dow Jones and in the Nasdaq and in the entire US stock market. I will discuss that in this the fifth point of the agenda. So guys, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to join my Patreon community in order to get the daily updates, the daily analysis of the S&P 500 from Monday through Friday, and also up to 50 opportunities in the premium stocks of the US stock market, then I've given the link in the description of the video and also in the comment section. Now guys, I'm going to begin with the first point of the agenda of this S&P 500 technical analysis, and in this the first point of the agenda, I will do the S&P 500 analysis on the weekly chart. Now guys, we are here and this is the weekly chart, and this is the first point of the agenda of this S&P 500 technical analysis. So this is the weekly chart. Okay, so now I will do the S&P 500 technical analysis on the weekly chart. So weekly chart means that the one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week, right? So let's first analyze the candle itself. If you look into the candle, then it's a bullish hammer. Bullish hammer, okay, a kind of bullish hammer where the close was equal to the high, almost equal to the high, okay. And secondly, it closed above the standard mark, okay. It has breached this the mark, okay. Mark was 4155, okay. So what it means? This simply means that there were the bullish sentiments at the time of closing, because the closing was almost equal to the high, and also it has breached the 4155 mark. This means that on Monday will be May 1st. On Monday, okay, we can expect either a gap up open, or irrespective of any open, means even if for some reason, for any known or unknown reason, even if there comes a gap down open, then also the S&P 500 will try to give a reversal and will try to almost to means to hit the 4169, means the previous close, okay. Almost, okay. So irrespective of any open, we can expect that the S&P 500 will try to move up. Not just the S&P 500, but also the Dow Jones and the entire US stock market, okay. So this is what we can see through this the candle, okay, that this is going to happen, and this is expected to happen technically. Now let's do the technical analysis on the weekly chart, okay. So at first, the Bollinger Bands, this is the upper band of the Bollinger Band, this is the median of the Bollinger Band, because the S&P 500 on the weekly chart has closed in between the upper band and the median of the Bollinger Band. This means that the S&P 500 is bullish through the Bollinger Bands on the weekly chart. Now comes the moving averages. If you look into the moving averages, clear fan out in the moving averages, and the S&P 500 has closed above the moving averages on the weekly chart. This means that the S&P 500 is bullish through the moving averages on the weekly chart. Then comes the Ichimoku cloud. Now finally, almost after 1 year, the S&P 500 was able to clear the Ichimoku cloud in the bull side. This is the bull side. This means that the long-term bearish trend that was there for now, okay, that can be considered, okay, that now it is over. Okay, so why I am saying that it can be considered, okay, but why it is not fully considered, okay, but why it can be considered? The reason is that this kind of movement, first of all, it was manipulated. Secondly, this manipulation, okay, it has happened just before the mega event. What is the mega event? The FOMC, okay, the FOMC. That is the reason we cannot say that yes, like for 100% the S&P 500 it will now go bullish, and now there will be no recession, and there will be nothing, and the stock market, okay, it will just move up. No, okay, because the FOMC is in the picture, okay, and once the Federal Open Market Committee decides, okay, that what will be the near future of the US economy, okay, and all other factors, and then the rate hike, in that case, this so-called the bullish, okay, this can simply change into the long-term bearish, okay. That is why whatever bullish you are seeing here, it is there only for 2.5 days, okay, Monday, Tuesday, and then by mid of Wednesday. That's it, okay. This bullish movement is only for 2.5 days. That's it, nothing else, okay. So now so that is why, okay, I've used the word can, that it can be, okay, but it is not 100% certain. Anyways, so the S&P 500 on the weekly chart has closed above the Ichimoku cloud. This means that the S&P 500 is bullish through the Ichimoku cloud, right? Now let's see what other technical indicators are saying on the weekly chart. MACD clearly bullish, because the MACD is more than the signal, clearly bullish. Stochastic RSI is again, it is also bullish, okay, stochastic RSI, because the K channel is more than the D channel. Okay, now there is one more thing that we can notice in the stochastic RSI. Looks like that next week, if it goes green, okay, if it goes green, then the K channel is expected to hit 100. Okay, 100 on the daily chart can simply bring the reversal. Okay, means we have seen that the day S&P 500 or the Dow Jones, okay, it simply means whenever it hits the 100, okay, there comes a reversal either on that day itself or the next day. Okay, in this case, this is the weekly chart, and if you notice that the 100 on the weekly chart is like hardly we have seen the 100. Okay, this means that as soon as it becomes 100 on the weekly chart, okay, As of now, I am not confirming that it will be 100 on Monday itself. Okay, once the stock market opens, so once the US stock market opens and S&P 500 comes into the session, then only it can be confirmed that whether it is hitting the 100 or not. But if it will be hitting the 100, then there will be very heavy chances of seeing a reversal, a good reversal. Okay, so that is not because that it has closed above, okay, there is the Chimoku cloud or something. No, because the technical indicators are saying that it is going to hit its saturation point. Okay, anyways, all of the technicals are good and so far everything is good. This means that the S&P 500 is bullish through the moving averages. S&P 500 is bullish through the Ichimoku cloud. S&P 500 is bullish through the Bollinger Bands. S&P 500 is bullish through the MACD. S&P 500 is bullish through the stochastic RSI. All of the technical indicators are supporting what? All of the technical indicators are saying that the S&P 500 is absolute bullish. Absolute bullish. So in such a situation or in such a condition when the S&P 500 is absolute bullish, okay, in that case S&P 500, and it's not just about the S&P 500 but also the Dow Jones and the Nasdaq or the entire US stock market, in that case it is free to move up. However, okay, there is a constraint, okay, and that is the FOMC, okay, the Federal Open Market Committee meeting on 2nd and 3rd. So on 2nd and 3rd this is the meeting, but the rate hike, okay, or whatever the decision will be. So I'm not speculating, okay, I'm simply saying that the Wall Street, that there is this is a 90% okay, that the Wall Street is expecting that there are more than 90% chances that the Feds are going to raise the interest rates. Okay, so this is what they are anticipating, right? So on 3rd, okay, their decision will be, okay, means we will come to know about the decision of the Federal Open Market Committee members and the most likely the Federal Reserve Chairman. Okay, so there will be the press conference of the Federal Reserve Chairman on Wednesday, and along with this the rate hike, okay, or whatever the decision will be there, okay, we will simply come to know what they are thinking, okay, what means on this particular part of the inflation, and then accordingly the entire stock market, the entire US stock market and the European stock market and the global stock market, okay, they will react to that particular news. Okay, so anyways, we are going to discuss this part in very detail in the next point of the agenda, that is the recession, FOMC, GDP, okay, and these things. So guys, once again, if you have not yet subscribed to the channel, then please subscribe to the channel and hit the bell icon. And if you want to participate in my if you want to join my Patreon community for the daily S&P 500 analysis and updates, then I have given the link in the description of the video and in the comment section. So guys, now let's move on to the second point of the agenda, that is the recession, FOMC, GDP, okay, and these things. Now guys, we are here and I'm going to discuss the second point of the agenda, that is the recession, the upcoming recession, and the GDP, the recent GDP data, okay, and the FOMC and the possible outcomes of the FOMC. But once again, as you know that I do not speculate, okay, whatever I'm going to present here, this will be based on the data, whatever the data, okay, that I have, or the whatever the data the government has published, and whatever data the Wall Street have, okay, or what the Wall Street is anticipating, okay. So everything will be based on this the data. So first of all, let me clear this thing, okay. So we are going to begin with the GDP data, okay, GDP. So when we look into this the GDP data, what we have seen that in first comes the Q3 2022 data. So it was 3.2% in the third quarter of 2022, okay. Then in the fourth quarter of 2022 it declined to 2.6%, okay, and in the first quarter of 2023 it has declined to 1.1%, okay. So we have 3.2%, then 2.6%, and now 1.1%, okay. So the GDP growth rate is, we can say that it is downward or it is negative, okay, anything you can say, but definitely it is not positive, and this is not the positive growth rate. So Q3 2022, Q4 2022, and Q1 2023. Now you can yourself, okay, see this thing that from 3.2 it declined to 2.6%, and then from 2.6% it declined to this the 1.1%, okay. This is the GDP growth rate. if this to be considered, then in the second quarter, the GDP growth rate is expected to be flat, either 0 or around 0, or like a real negative number. Okay, so I am just calculating that if we consider this the fall that is there, okay, quarter on quarter basis, in that case definitely, okay, from 2.6% to 1.1%. So we can simply say that the GDP growth rate, okay, it is on the constant decline, right? So what it indicates? This simply indicates that everything is slowing down. And what does that mean? This simply means that the economy is heading to the recession. It is heading to the recession. And in my previous S&P 500 technical analysis, I have shown you this the FOMC minutes. If you see FOMC minutes, right? So this was on 22nd of March. So the staff economic outlook. The staff's projection at the time of the March meeting included a mild recession starting later this year. Okay, means after this the second half of the year 2023, with a recovery over the subsequent 2 years, means by 2025, and the real GDP growth in 2024 was projected to remain below the staff's estimate of potential output growth, and the GDP growth in 2025 was expected to be above that of potential. Okay, means these are policy makers. Okay, it means the Fed, the Federal Open Market Committee members. Okay, they have seen this thing, that this GDP, okay, as of now, it is as per their expectations, it is declining, it is on the constant decline, it will keep on declining, okay, in the year 2024 also, okay, it will remain below the normal, okay, below normal, and then in 2025 everything is expected to come back to the normal. Okay, so they have already expected that a recession will start, okay, later this year, means. And if we see that on an average, the recession that we have seen, okay, it is like 18 months, 1.5 years. Okay, the last the Great Recession in 2007-2008, okay, that was there for 18 months, because they decide that what should happen to the economy and how it should happen to the economy. They raise the interest rates, or they simply cut the interest rates, okay, etc. Means as per the demand and supply, okay, or as per the situation that is out there, right? Now the rate hike, okay, the rate hike. So the Wall Street is anticipating that there are more than 90% chances that there will be, this a quarter percentage points of rate hike, 25 bps. Okay, so as of now, the economy, okay, not just the stock market. See, stock market is not the economy, right? So economy is a different thing, and stock market depends on the economy. Okay, so now it doesn't matter that whether they are going to raise the interest rates by 25 bps, 50 bps, 100 bps. No. So as of now, the dividing line will be that whether they are going to raise the interest rates or not. Simple. Okay, it's not about 25 bps or 50 bps or so, whether they are going to raise the interest rates or not. If they are not going to raise the interest rates, then this bullish movement will continue. Okay, or even if they say that, okay, this will happen, they are anticipating this thing, or they may raise the interest rates in near future, doesn't matter. Okay, if they simply do not raise the interest rates, okay, in this month, then the bullish movement will continue. Okay, continue towards what? Continue towards 4,300 and 300 and beyond 4,300. Okay. But 4,300, okay, that is the 61.8% of the Fibonacci retracement level. Okay, so like 4,155 was the 50% of the Fibonacci retracement level. 4,300 is almost, okay, this is the 61.8% of the Fibonacci retracement level. Okay, now if they say that we are going to raise the interest rates, okay, forget, so just forget about the number. If they say that we are going to raise the interest rate, in that case, that's it, no more bullish movement, okay, a downward movement. So there is this thing that you yourself can identify that whether the Feds are really going to raise the interest rates and what will be the implications. If you see that on Monday and Tuesday and by mid of Wednesday, if the entire US stock market is up, it is bullish, or the S&P 500 is bullish, or the Dow Jones is bullish, okay, against all expectations, against all technicals, it is simply bullish. Okay, that is the first and the clear indication that the entire okay, means these are cartel members. Okay, we call them the cartel members. Okay, So because they decide that what should happen in the US stock market. Okay, so now this simply means that now they know that the Feds are going to raise the interest rates. Feds are going to push the entire economy in the recession. Okay, and that recession can begin as early as in the month of May and the June. Okay, this means that now they are going to, because they have already given this the this unexpected movement. Okay, because they were fearful or they are in rush. Okay, they simply want to build a trap so that once the Feds they raise the interest rates, by that time, okay, they will simply convince, okay, all of the retail traders and everyone that, see, this is a bullish movement, and also technicals are also supporting the bullish movement, means everyone should come and participate in the bullish movement. But in actual, it is not a bullish movement, this is a bullish trap. And this is almost similar to this the illogical movement that was there, okay, back in early March. So when the Fed chairman, okay, he was about to testify to the Senate and the Congress. Okay, so they gave this the heavy upward bullish movement beyond the technicals, and it moved up, and so, okay, and then what happened? Okay, the day he has testified to the Senate and the Congress, and he has cleared his intention that the Feds are going to do this. Okay, that the Feds are going to cause the recession, and that will simply bring this the bearishness in the entire economy. And then we have seen that what has happened. Okay, so these are market manipulators. They were simply preparing. They were simply preparing for the mega event. Okay, similar to something that we are seeing here. They are simply, again, they are preparing for the mega event. Okay, nothing else. So guys, if you notice that on March 22nd, okay, last time when these the rate hikes were announced, okay, I have given the back to back these updates. Okay, and what is going to happen, what will happen, okay, what the statement, what has changed in this the statement, and how it is going to impact the entire stock market. Okay, so that was the reason that on March 22nd, okay, we have seen this thing. Okay, this a very heavy bearish candle, right? So what they did, that they initially they pushed it up. Okay, but when the Federal Reserve chairman, okay, during his press conference, okay, so when he spoke about, like, economy, okay, and all of these things, then what has happened? Okay, they kept it there, and then all of a sudden a very heavy fall. Okay, so this is how, so my community members, they knew, okay, that no, this is not bullish. Okay, this is going to come down intraday itself. So guys, if you want to join my Patreon community, then I've given the link in the description and also in the comment section. And if you are already my community member, then on Wednesday, okay, just be ready for this thing. Okay, and I will update you, every 15 minutes or every 10 minutes or so that you can prepare yourself, and accordingly, you can trade on that particular day and then the coming days. So guys, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. Now guys, let's move on to the third point of the agenda, and the third point of the agenda is the support and resistance levels for the S&P 500. Now guys, we are here, and this is the third point of the agenda of this S&P 500 technical analysis, and here I will tell you the support and resistance levels for the coming week. Okay, now in the coming week, the upward movement, technically the upward movement should be restricted. Okay, means because we have seen, okay, there's a very heavy, there's the bullish movement, okay, here, so it has already overstretched the lower level technicals. Okay, everything is overstretched, so the upward movement by Wednesday, mid of the day, so 2 p.m. Eastern time, US and Canada. Okay, so the rate hike will be announced, so by 2 p.m. it can move up to 4,227 at most. Okay, so this is as per my expectation that the technicals, okay, they might allow, okay, this the upward movement, okay, up to this mark or up to this level, right? Okay, so let me, because as of now the S&P 500 has closed at 4169. Okay, so the immediate resistance level, so not just the level, but it's the zone. The immediate resistance zone is 4185 to 4195. 4185 is my calculated resistance level, and 4195 is the previous high. If you notice, this was the previous high, 4195. Okay, it gave up and it came down, right? So that is why there is a heavy, this is the resistance zone from 4185 to 4195. Okay, as of now on Monday, okay, as we are anticipating that it will try to move up, so in that case this should hold. This should means this particular level, this particular zone, okay, it should hold the S&P 500, Okay, in this the upward side, in this the bullish side. Okay, now if it is able to breach on Monday or on Tuesday, okay, or on Wednesday morning, if the S&P 500 is able to breach, in that case at most to 4227. Okay, so by the time the rate hike is announced, we can say that the S&P 500 can move up from the current point to the this 1.4%. Okay, approximately, let's keep it 1.4%. Okay, 4227, and then after 4227, okay, then we have 4262. Okay, approximately this is the next resistance. Then we have 4291 and 4307. Okay, 4291 is my calculated resistance level, very well known, historically proven itself again and again. Okay, in any kind of situation. Then 4307, approximately this is the 61.8%, the 61.8% of the Fibonacci retracement level. Okay, so this means that from here, means if the outcome of the FOMC meeting, okay, during his press conference, okay, or in the notes, okay, so when the the rate hike will be announced, then the committee members, okay, they will release the press note. If in the press note, if there comes any kind of this clue or any kind of communication that says that now the Feds are going to stop raising the interest rates, or they will simply, or means or they can start some kind of, means they can do some kind of that the thing, okay, that can be supportive to the stock market. Okay, so we will come to know only on Wednesday itself. So if there comes anything positive, in that case the S&P 500 has the potential in the coming week to move towards 4291 and 4307. This was earlier in the picture, okay, when it was moving up. So this was earlier in the picture, but it failed, and now the manipulation movement. Okay, so that is why we are seeing this thing here. And so 61.8% of the Fibonacci retracement level. Okay, so these are the resistance levels. Now let's talk about the support levels. Okay, so we need to just keep a broad range, okay, for the coming week, because some mega event is there in the picture. So the immediate support is at 4155. This is the immediate support, 4155. Okay, 4155 immediate support. Then comes the 4127. Okay, the next support, calculated support, 4127. Okay, then we have 4110, standard support, standard level, 4110. Okay, the next support is 4091. Okay, calculated support. Then we have 4065. Okay, then we have 4035. 4035 is actually the zone. 4035 is the zone, or the standard zone, or the standard support zone that can help the S&P 500. Okay, if everything goes against the US stock market, against the S&P 500 on Wednesday, in that case the zone of 4035 can hold or can give the necessary support to the S&P 500. Okay, then comes the 200-day EMA, 200-day exponential moving average, and it is at 4020. Okay, so the next support immediate will be 4020 or 402221, etc. Okay, then we have the Ichimoku cloud itself providing a very good support at 4002. So after this, the 4002, then we have 3990, 3980, a good support zone, okay, here at 3890, and 3980. So we are going to keep it like 4% to 5% fall, 4% to 5% fall. Okay, and in the bull side we are keeping it, because the technicals will be overheated and saturated. So we are going to keep it like 2 to 3% at most. Okay, again, yep, 2 to 3%. Okay, because technicals will not support that kind of very heavy movement. Okay, but in the bear side, okay, it is open up to this 4000 level. So guys, there is one more important information that I want to share with you, is that if you want to get these the daily updates, the daily analysis of the S&P 500 from Monday through Friday, as well as up to 50 US stock market opportunities in the premium stocks, then let me tell you that how you can join my Patreon community. So you need to visit my Patreon page, and I've given the link in the description of the video and in the comment section. So once you are there on the page, then you will see that there are the 3 membership levels. So the first one is the daily S&P 500 updates, which is for the non-US Canada residents. And then comes the daily S&P 500 updates, and this is only for the US and Canada residents. Okay, this membership level is only for the US and Canada residents. Then comes the US stock market opportunities and daily updates. So this is open for all. So this is not country specific or this is not region specific. So you can select the membership level you want to join. And if you notice that many members have already subscribed and joined my the daily updates, the daily S&P 500 updates, as well as the US stock market opportunities from Monday through Friday. So guys, once again, I've given the link in the description of the video and also in the comment section. Now guys, I'm going to discuss the fourth point of the agenda of this S&P 500 technical analysis. And in this, the fourth point of the agenda, I will do the technical analysis of the S&P 500 on the daily chart. Remember the daily chart. Let me write it down, daily chart. Okay. So the daily chart means that the one candle represents one day, right? One candle means one day. So let us first analyze the candle itself. So if you look into the candle, it is a very heavy bullish candle where the closing of the candle was equal to the high of the candle, almost equal to the high of the candle. Okay. So what it means? This means that there were the bullish sentiments, there are the bullish sentiments, and these bullish sentiments are expected to be carried forward to Monday. Means on Monday we can see a gap up open, on Monday we can see a gap up open, or irrespective of any open, we can expect that the S&P 500 will try to move up. As simple as that. This is what the candle is signifying. And because the candle has closed just by 1 cent from this the recent high, this is again okay a significator that the stock market, that the US stock market has the intentions to move up, right? Now comes the technical analysis. So the technical analysis, at first, okay, the Bollinger Band, this is the upper band of the Bollinger Band, this is the median of the Bollinger Band. Because the S&P 500 has closed in between the upper band and the median of the Bollinger Band, this means that the S&P 500 is bullish through the Bollinger Bands, right? Then comes the moving averages. Because so earlier there was a mild this is a crossover, okay, that was supposed to confirm, okay, this is the bearish side, but then all of a sudden, okay, everything has changed in last 2 days. Okay, so now the moving average is clear fan out and the S&P 500 has closed above the moving averages. This means that the S&P 500 is clearly bullish through the moving averages on the daily chart. Then comes the Ichimoku cloud. Because the S&P 500 is still trading above the Ichimoku cloud, this means that the S&P 500 is bullish through the Ichimoku cloud on the daily chart, right? Now let's see what other technical indicators are saying. First comes the MACD. So recently MACD has changed. So this is what I've informed, okay, on this particular day to my community members, that see now the MACD has changed to bearish. MACD is bearish, stochastic RSI bearish. This means that now we are going to see more bearishness in the US stock market and also in the S&P 500. And even if there comes any upward movement, that will be limited and then it will give up and it will come down. Okay, and exactly that has happened, okay, on Wednesday, right? But we were prepared for, okay, these are days Wednesday, Thursday and Friday, that because of high and heavy volatility, okay, manipulators can come anytime into the picture and they can change the trend, the course of the entire US stock market. Okay, anyways, now the MACD is still bearish because MACD is less than the signal. MACD is bearish. Okay, this is a very important technical indicator. Okay, so S&P 500 is bearish through the MACD on the daily chart. Then comes the stochastic RSI. If you look into the stochastic RSI, the K channel is more than the D channel. K channel is more than the D channel. This means that the S&P 500 is bullish through the stochastic RSI on the daily chart. All the technical indicators are fine. Volatility is moving up. Okay, it is high as of now. Okay. So now on the daily chart, we can clearly see that the S&P 500 is bullish through the Bollinger Bands. S&P 500 is bullish through the Ichimoku cloud. S&P 500 is bullish through the EMS moving averages. S&P 500 is bearish through the MACD. MACD is moving average convergence divergence, right? So then the S&P 500 is bullish through the stochastic RSI. As of now, S&P 500 is 75% bullish on the daily chart. Okay, and on the weekly chart, what we have seen that the S&P 500 is absolute bullish. This means that overall, okay, everything is bullish. Okay, just a little bearishness through the MACD on the daily chart. Okay, and we cannot ignore the MACD because because the MACD itself has the potential to change the course and the trend of the entire stock market, and the indices like S&P 500, Dow Jones or Nasdaq. Okay, so MACD is very important technical indicator. So this is what we have seen. So guys, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And also if you have liked this video so far, then hit like. Now guys, let's move on to the fifth point of the agenda, fifth and the final point of the agenda, and that is the probable movement of the S&P 500 from May 1st, that is Monday, through May 5th, which is Friday. Now guys, we are here, and this is the fifth point of the agenda of this S&P 500 technical analysis. And here we are going to discuss the probable movement of the S&P 500 in the coming week. That how the S&P 500 is going to behave, or how the S&P 500 is going to trade from May 1st, that is Monday, through May 5th, that will be Friday. So let us divide this the week, okay, into two parts. Okay, Monday, Tuesday, and then Wednesday. Okay, and then Thursday, and then Friday. So Monday and Tuesday, nothing special. Okay, and the S&P 500 is free to move okay, as it want to. Okay, with manipulation, without manipulation, doesn't matter. Okay, then Wednesday. So Wednesday is very important. Okay, so in the second half, okay, after the 4-hourly candle on Wednesday, things will be clear that what is going to happen, what is the future of the US stock market. Okay, at least for next few months or for 2 years or so. Okay, so this will be very much clear on Wednesday itself. Okay, once the press note is released, and if you are my community member, okay, then be ready to grab the information. Then I will give you this information, okay, as soon as it comes out. Okay, and also, okay, during the press conference of the Federal Reserve Chairman, okay, I will inform you that how you should plan your trade. Okay, bullish or bearish, etc. Okay, and whether the current movement, whatever will be the movement in the entire US stock market at that particular point of time, okay, whether that movement can be trusted or not. Okay, and what should be considered as higher low or the lower high. Okay, or the point of entry. Okay, etc. And so on Wednesday things will be very much clear. Then on Thursday and Friday, okay, the entire US stock market will align itself, okay, in that particular trend, whether it will be bullish or bearish. Okay, and accordingly it will move, it will behave. Okay, and so whatever is going to happen, heavy up, down, okay, or whatever volatility will be there, it will be on Wednesday itself. The next thing is that if the Feds, okay, if they decide to go against the stock market, okay, against the stock market means if they just follow their usual course. If they raise the interest rates by 25 bps means the interest rates will be quite higher, and many banks, they will not be able to hold, or means many of these are banks, small or the big banks. Okay, they are already on this okay, this is the thin line. Okay, thin line. Okay, so this is 25 bps. This can simply break many of these banks. Okay, so now when that happens, okay, see guys, one more thing that you must understand, that stock market, the entire US stock market, even with the hundreds of billions of dollars, okay, it cannot fight the Feds. The US stock market has no potential, absolutely no potential to fight the Feds, because if the banks, if they goes down, then even the market manipulators, they cannot help the US stock market to move up in any case. And if they are doing so, in that case they are simply going to lose hundreds of billions of dollars. So the market manipulators themselves, okay, they even they fear the Feds. Okay, my point is that if the Federal Reserve, okay, if the Federal Reserve Chairman, okay, and if the FOMC committee members, okay, if they decide to raise the interest rate by 25 bps or so, okay, in order to cool down the inflation. Okay, and once again guys, you must remember that the inflation, the core inflation is still holding, it is not coming down. Okay, so if that happens, in that case what will happen? As per the theory and as per the concept of the manipulation, okay, so what happens is that the stock market, the US stock market, or the S&P 500 index, or the Dow Jones, or any stock. Okay, so as of now we are talking about the S&P 500. It will it will be back to the levels from where it was manipulated. This is the concept of this, the manipulation. Okay, so during the manipulation, okay, there comes an unexpected movement, okay, an unexpected and an undefined movement, okay. And when there comes like situation, okay, something like this situation, okay, because of which, okay, it was manipulated, then that particular index or stock, in this particular case this is the S&P 500, it will be back to the levels from where it was manipulated. Okay, means 4056, then 3972. Okay, these are the levels that I'm talking about. Okay, so in that case, so this is as per the concept of the manipulation. Okay, this happens, and then the entire US stock market, okay, it comes down to the levels from where it was manipulated. Okay, first we have 4056. Okay, easily, very easily, okay, it can come down. Okay, even in a single candle it can come down. Okay, then 3972, yes, 3972 might take 2 or 3 candles. Okay, but 4056, okay, it will be there in the picture. So this is as per the concept, as per the theory of the manipulation. Okay, so you might not find it, okay, in any of the books, but this is as per my research. And if you are my community member, or if you are my subscriber for last many months or years, then I have shown you this thing, okay, many a times, that see, now this is happening and it was manipulated from this level, and now it is just back to that level, right? So yes, now most of you want to know that, okay, that what will be, okay, or where the S&P 500 will be heading to. So at first the S&P 500 is heading to, okay, it is heading to this level. This is 3500. Okay, 3500. So because that was actually the point, from where the entire the US stock market or the S&P 500, okay, it was heavily manipulated in a way that the course, okay, it was changed. It was going bearish, okay, and that was, okay, the kind of, okay, it was entering into the recession, okay, but then they changed the entire course and then they brought it back. So it is not just about 4056 or 3970, no, it is about 3500. That is the actual level. Okay, and during the recession, okay, you will see that definitely the S&P 500, okay, it has come down, it has hit the 3500, not just 3500, it has even come below the 3500. Okay, so just remember this thing, okay, and mark these levels. Okay, this has happened always, okay, and this will again happen. This is nothing new, okay. Anyways, I hope, okay, now this picture is clear. Fine. Okay, this was the big picture. Now let's talk about, okay, Monday, Tuesday, and other days. Not exactly the other days, but we can talk about Monday, Tuesday, and Wednesday, first half only. Okay. So as of now, on Monday it is clear that it is going to move up, right? That we know because of the candle. So on Monday it is expected to hit 4185 and 4195. Okay, if there comes a gap up open, okay, or irrespective of any open, we can expect it to move up. If there comes a flat open or a gap up open, then definitely 4185, 4195 will be in the picture. Okay. Now the question is that whether the S&P 500 will be able to breach this zone or the level 4195. Okay. So if you notice that last time it was 4195.44. 4195.44, that was the previous high. Okay, so this is the exact number. Okay, so the question is that whether it will be able to breach or not. Okay, as of now, the S&P 500, okay, through the market manipulators has shown its intention that yes, it can, because if you notice, okay, the high of this candle was 4169.48. okay, and what you can see that the closing was 4169.49. okay, so you can clearly see that just by 1 cent, okay, this is the well-known manipulation technique called as mark the close. Okay, most of the time we see this thing happening. Okay, nothing new. So just by 1 cent, so this means that they have cleared the intention that no, they are not going to stop as of now. Okay, rather they know something, okay, very well, or and because there is a consensus, okay, there in this Wall Street, okay, among the Wall Street traders, okay, the big ones and everyone, that there are more than 90% probability that the Feds are going to raise the interest rates by 25 bps. The worst impact will be on the banks, that we know. Okay, the last time they have raised the interest rates, Silicon Valley Bank gone, First Republic Bank gone, Credit Suisse gone. Okay, then Deutsche Bank, okay, it braced for the impact. Now the next 25 bps is further going to break the banks. Okay, so now they are simply preparing for this thing, so they are simply going to push it up so that they can, you know, form a trap. Once the trap is there, okay, everyone is bullish and everyone is thinking it is bullish. Okay, because they do not want to know what is happening, what has happened, okay, why it is happening. Okay, they will go bullish and then a sudden fall and a trap. Perfect. Okay, everyone will be trapped there. So as of now they are simply trying to accumulate the volume. You must understand the role of volume. Without volume, okay, they cannot do anything, because they have, you know, billions of dollars, hundreds of billions of dollars to you know, to sell. They want to sell. Okay, so in order to sell they need the buyers. Okay, and how they are going to find the buyers? They are going to find the buyers this way. Anyways, as of now, okay, anyways, once again, I do not speculate. Okay, I will rather wait for the press note. Okay, this is the press release. But as of now, yes, there is a consensus. Okay, there among the Wall Street, okay, analysts and traders and everyone, that 90% probability Feds are going to raise the interest rates. Okay. So we were talking about, okay, that now the stock, this the S&P 500 through the market manipulators has you know, cleared its intention. Okay, just by closing above just by 1 cent, that yes, it want to move up no matter what. Okay, as of now it doesn't want to stop until and unless okay, the press note is released or the technicals become oversaturated. Okay, now, so this means that on Monday there are very good chances that it can hit the 4185, 4195. Okay, and also it can breach 4195. Okay, now hitting 4195 is not a big deal, but a breach of 4195.44 is the big deal, because a breach will tell us and tell everyone, or will convey a message that, see, now the S&P 500 and the Dow Jones and entire stock market doesn't want to hold, rather it simply want to move up, up and up. Yes, so now I have mentioned the Dow Jones. Let me show you, okay, what the Dow Jones is going to face. For the Dow Jones, 34310 is the mark. Okay, this is where the Dow Jones is going to find a very heavy resistance. Okay, earlier its resistance was 34059. Okay, yesterday it has breached this the resistance. Okay, earlier it was 790, then 33585. Okay, it was there, then 33790. Okay, so now the next one is 34310. Okay, so if you notice, fail. Okay, so 34310. So because we are looking into this S&P 500, and because, you know, these are indices, S&P 500 and the Dow Jones, they are the part of the US stock market, so they are interlinked or they are interrelated. Okay, they share, okay, the same components, etc. That is why we need to look into that. So by that time, this the S&P 500 will be moving up, and it will be like 0.65% or so. Okay, it will be up. At the same time, the Dow Jones, if we consider the Dow Jones, then the Dow Jones will be like, yep, it will be around 34310. This means that yes, 34310 in the Dow Jones, 4195 in or 4185 in the S&P 500. On Monday, this is going to create a very heavy resistance. Okay, so if it is able to clear the 4195 on Monday, not just clear, but if it is able to sustain, above 4195 on Monday, then on Tuesday, yes, because on Monday itself it will be means there will be this saturated technicals on the lower level charts. Okay, then on Tuesday further. Okay, but that is no surprise, because the mega event is in the picture and manipulation is on. Now, because manipulation knows nothing, okay, no technicals, nothing. Okay, so they can they can do that. Anyways, technically speaking, if the S&P 500 is able to hold above 4195 on Monday, at the same time, if the Dow Jones is able to hold above 34310 on Monday, in that case, chances are that on Tuesday it can move towards 4227. Okay, that will be the next resistance level. Okay. Now, if it is able to fail, means if it is able to move up and breach 4195, but at the time of closing if it closes below 4195, in that case it will have to again it will have to struggle around 4185 4195 before it can try again. Okay, now if it gives up, in that case where it is going to come down, it is going to come down to 4155. Okay, then it will have to sustain above 4155. If it come down, so if it comes down on Monday itself, let's say on Monday itself, okay, or maybe on Tuesday itself, if it comes down, but if it sustains above 4155, because earlier 4155 has created, you know, a lot of you know problem for the S&P 500. So if it is able to sustain on Monday itself above 4155, then on Tuesday we can again see that it is trying to move up. If it sustains above 4155 on Tuesday, then we can again, you know, see that on Wednesday, at least, you know, in the first half or in the first hour or so, okay, it is trying to move up. Okay, so as of now up to 4227, because by the time it hits the 4227, the technicals will be already, okay, like in this the saturation, okay, in this the saturated thing. And guys, once again, don't forget that on the weekly chart of the S&P 500, we have seen that the stochastic RSI may hit 100.00. I'm not confirming that it is going to hit, but it may hit. Looks like that it may hit 100.00. Okay. So if you are my community member, okay, then on Monday itself we will come to know, okay, whether the number is 100 or not. Because once it becomes 100, then on Monday itself there will be chances that it is going to give a reversal. If not, if it becomes like this is a 100 on Tuesday, okay, so then there will be chances, okay, of a reversal on Tuesday. And guys, once again, remember we are talking about the weekly. Weekly means that what happens in 1 week from May 1st, that is Monday, through May 5th, that is Friday. Okay, so what happens between the Monday and Friday, okay, entire week, that is the weekly chart, right? So let's say if let's say there comes a red candle on Monday, okay, and we might think, okay, that it is not 100%, but there comes a green candle on Tuesday. Okay, in that case again, okay, it may become 100. Okay? So it is different. So this is the weekly chart. Anyways, Monday and Tuesday, okay, this is clear. At most 4227 it can move up, okay, even with the manipulation, because as of now, by the time it moves up to 4227, okay, technicals will already be, you know, very much saturated. And also by the time it moves up to 4227, okay, it will be around means the Dow Jones will be around this okay, this mark. This mark is how much? This is 34,590. 34,590. Okay, and this is very heavy. Okay, this is the resistance. So this means that beyond 4227 by Tuesday, okay, as of now it is not expected, because if the S&P 500 try to move up or try to breach the 4227, then the Dow Jones will restrict that movement. Okay, so this is how, okay, they are interrelated, and this is how they are interlinked. Okay, so so now this picture is clear that on Monday, okay, 4195, okay, it is going to create a very strong hurdle, and a breach, not a breach, but a sustain and a close above 4195.44 on Monday can help the S&P 500 to move towards 4227 on Tuesday, okay, or by first half on Wednesday, right? But a failure of S&P 500 to close above 4195 means that on Tuesday again it has to try, or it has to retry or try, okay, whatever it is, okay. And if it is able to close above 4195.44 on Tuesday, okay, then on Wednesday in the first half it can again try to move up towards 4227. So guys, remember we are talking about Monday, Tuesday and first half of Wednesday, right? Now if on Monday if there comes a gap down open, then it will try to move up, try to sorry, not before the gap down open, it will first try to sustain or first try to retest the 4155 level, okay, before it can move up. Okay, now if it moves up, again the same theory, the same thing, but if it gives up means it moves up, but again if it gives up 4155, if it comes below 4155, okay, and sustains below 4155 for 2 hours or so, okay, in that case the upward movement, okay, it will not be expected, okay, on Tuesday or Wednesday, okay, but any upward movement will be expected to be limited to 4185 at most, or 4169, that's it, okay. But the downward movement will be there, okay. At first it will find the support, okay, at 4127, okay, and thereafter yes, 4127 will provide very good and very heavy support, and then the downward movement will further find support at 4110. Okay, but now because we have seen a very heavy manipulated movement, this means that as of now we are not expecting that the S&P 500 will give up so easily, okay, on Monday and Tuesday. Okay, it can give up on Wednesday first half itself, but on Monday and Tuesday chances are less. But if it happens, then 4110 is expected to hold. Okay, because anything below 4110, okay, it is a bearish signal, it is bearish, simple. Okay, so if it comes down, then 4110, right? Now comes Wednesday and after Wednesday. Now see, again, I cannot confirm that this will be 100%, but I'm giving you the probable movement, because I do not know, okay, that whether there will be a rate hike or not, and if there will be a rate hike, then what will be the comments of the committee members. Okay, because comments and also the press conference of the Federal Reserve Chairman, okay, is means the weightage of the press conference of the Federal Reserve Chairman is much more than the rate hike itself. Okay, so now if on Wednesday, so guys, once again, if you are my community member, then on Wednesday, okay, just be ready to get this frequent updates, and just make sure that you enter and you exit, okay, at the right time. Okay, so on Wednesday, what will happen if there comes a rate hike as anticipated, 90%, okay, consensus, okay, Wall Street. If there comes a rate hike and bearish comments, for example, if the Federal Reserve Chairman uses the word recession, okay, because so far the Federal Reserve Chairman has never, okay, used the word recession. Okay, secondly, in the press release, okay, the word recession, it was never used. Okay, this means that in the press release itself, if there comes any word, okay, anything that says recession, okay, clear bearish indication, clear bearish sign, okay, means now heavy bearish sentiments. Okay, now this is the press release. Okay, if everything see the first thing is that if there comes bullish sentiments, means no rate hikes, and then further bullish sentiments, in that case this side, okay, it is clear. Okay, in that case the S&P 500 and the entire US stock market is free to move up. Okay, this is very clear and very simple. Yes, before it can move up, what will happen, that they can try to dump to 4127, okay, or even to 4110 to create a fear, so that they can again buy, and then they can prepare for the long term. Okay, this can happen, right? Now the second case, the most likely scenario, okay, where the Feds are going to raise the interest rates by 25 bps, and a bearish statement, okay, or the bearish comment, okay, or anything, or any kind of statement. In that case, these are market manipulators intraday, okay, they can try to move the S&P 500 up, okay, and then they will dump, right? Or they will just move up, then dump, and then again up and dump. So this up down, what this is going to do, this will simply create FOMO and fear, okay, among the retail traders. Okay, because retail traders, they are trading with the 1 minute candle or the 5 minute candles. Okay, so they are going to be influenced very heavily, immediate fear or immediate FOMO, this thing. So this will simply help the market manipulators to adjust their trades, okay, by swinging this the US stock market, okay, up down, and with this the swing, okay, they will collect the maximum premium, okay, from these retail traders, and they will put the retail traders, okay, into the net losses. Okay, some might be lucky, okay, some might get lucky to make some money, otherwise, okay, almost, okay, everyone will see the losses because of this the heavy fluctuation. Okay, and then once they think, okay, now is the time, then they will simply dump everything. Okay, dump everything, as in just like we have seen, okay, on this day. Okay, they have given this the up down, finally dump. Okay, and also, okay, here up and up down, finally a candle. Okay, and next day testimony, and up down, finally given. Okay, something like this. Okay, so this will be the scenario. Now as soon as there comes a candle that on Wednesday or on Thursday, okay, as soon as there, not a candle, but as soon as there comes a closing below 4129, a closing below 4129, as soon as there comes a closing below 4129, either on Wednesday or on Thursday or on Friday, this will be the first indication, okay, that now the S&P 500 has given up and it is going down. Okay, now a closing below 4056, closing below 4056 is another clear indication it is clearly bearish, okay, and it is going down. Okay, so this will be the two immediate, okay, not exactly, okay, these two immediate, but 4155 also, yes, it will again come into the picture. So a closing below 4155 at first is a very early indication that the S&P 500 has given up, the US stock market has given up. Okay, next 4129, okay, more confirmation, then 4056, okay, a clear confirmation, right? This will be the thing. So this means that now it will come towards 3972 to fulfill its this a manipulation, okay, this obligation or whatever you say. Okay, so this is my research and my theory. Okay, this is what I found, that this happens, and this has happened always in last 100 years or more than 100 years of history of the stock market. That okay, this thing has happened, this happens. Okay, there's a manipulation that it comes down, okay, to the levels from where it was manipulated. Okay, so this will be the clear confirmation, right? As of now, you can use these the support and resistance levels, okay, that I have provided here. But again, guys, I cannot confirm that what will be the post Wednesday picture until and unless I see the numbers and the statement and the comments of the Federal Reserve Chairman. So that is all subjective. That is why, okay, I have so that is why I have clearly mentioned that what you can expect on Monday, Tuesday, and first half of Wednesday. But post the second half, okay, on Wednesday, things will be subjective, right? And if you are my community member, okay, then definitely, okay, I will tell you, okay, what exactly is happening, how it is happening, what is the purpose, and where now where the S&P 500 and the entire US stock market is heading to, okay, and whether you should change your, you know, and whether you should change your mindset, okay, from bearish to bullish, okay, or this thing. And yes, there is a, okay, and yes, there are, and guys, yes, there are chances of the consolidation, okay, before actually before this the recession begins. Okay, if the market manipulators want, then they can push the entire US stock market into the consolidation. Means what will happen? Just up down, up down, up down. Okay, it won't go up, it won't come down, it will just up down, up down, up down. Okay, consolidation. Yes, this can also happen before they can push the entire US stock market into this the recession. Okay, so again, for that, okay, again we need to wait for Wednesday. So movement on Wednesday, Thursday, and Friday will confirm, okay, whether it is going to enter into the consolidation or not. So guys, if you want to join my community, then I've given the link in the description and in the comment section, right? You can join my community, and then you can get the updates on Wednesday. Okay, that is the most important day, that what is going to happen, right? So guys, if you have liked this video, then hit like, and once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And guys, if you have any questions or anything that you want to ask, then please feel free to comment, okay, and I will answer to your questions. So guys, this was my S&P 500 technical analysis for the week of May 1st, 2023. That is from May 1st, which is Monday, through May 5th, which is Friday.